based upon what's happening in this year's corporate profits and so on, but rather the longer term outlook for 21 and beyond.
What does it mean for how? So let's say we do have a Biden administration with actually, also Democrats in the House. What does it mean for how the economy will change in the U.S.?
Yeah, one of the things I believe that I've picked up anecdotally, and I stress this as anecdotally, is that when I speak to investors, there is some uncertainty as to what the president plans would be in a second term. So there's not really an understanding beyond tax policy in terms of what would happen. There's been disappointment, for example, in terms of no follow-up on infrastructure policy. There are concerns in terms of what would happen with regard to regulatory policy, particularly as it relates to some environmental issues. And there are also some concerns as it relates to healthcare. One of the things that many investors are now concerned about, as are many voters, is that we have a rise in unemployment. Fortunately, it has been moving lower. One of the reasons it's moving lower is not just because jobs are being restored. We've now restored about half of the 22 million jobs that were lost. But we also see that people are stepping out of the labor force. And just the arithmetic of what is an unemployment rate, the denominator is the number of people in the labor force looking for jobs, and we see that that number has been getting smaller, and that is of concern to many people. And so when we take a look at what investors are concerned about now, not much concern about what this quarter's earnings will be or next quarter. And even for 2021, even though the Goldman Sachs view is a little bit stronger than the consensus, the general view is that world economic growth will be jumping up 6 to 8% next year, in part because of a low base. But what happens after that, and what happens to some of the structural problems that have been unveiled by, in fact, this very difficult pandemic?
Enough material there for another 3-hour conversation with Abby Joseph Cohen, and we'll try to compress that down a little bit. She is, of course, with Goldman Sachs, and we will continue. Futures up 15, Dow futures up 116. Coming up from Asia, our Kathleen Hayes in conversation with Kaplan of Dallas. Stay with us. This is Bloomberg.
Everything around us, including the way we work and live, has been interrupted. Uninterrupted service is peace of mind. Kimmy from customer support is responding to a 500% increase in daily call volume, no matter what. We keep on, so you can keep on.
Mercedes-Benz is on a path towards CO2 neutral mobility. So we have flicked the switch there, and really we're going to step by step electrify everything. And what does that mean? Combustion engines get electrified.
Give you a sense of the real-time action. The 10-year yield tumbling now 11 basis points, so continuing in this knee-jerk risk-off feel.
The president's trade war with China. You lost that trade war. You lost it. What ended up happening is because of a so-called trade war with China, America lost 300,000 manufacturing jobs. Farmers have experienced bankruptcy.
Lost the trade war with China. Joe Biden never fought it. Joe Biden has been a cheerleader for communist China through over the last several decades.
A debate in Salt Lake City as we migrate to Miami here on October 15th. At least that is the plan. And of course, there, just for a moment on China. And really, we can say that it seems to be the most bipartisan support of any issue is the debate of China and its future in investment, finance, and politics as well. With us, Abby Joseph Cohen of Goldman Sachs, an advisory director and senior investment strategist. Abby, you know, I kid about a 3-hour conversation. There's so many good research pieces your shop is putting out on the bigger, broader view. But I really must come back to China and the collapse, the lessening of world trade. It's a serious issue. How do we fix it?
It's an enormously serious issue, Tom. And we think that one of the best approaches is to work with our economic allies to fix this. And that's what the Trans-Pacific Partnership was all about. This was a group of approximately 15 countries with the United States at the head and other nations that are either based in Asia or do a great deal of trade in Asia. And the one exception to the membership was China. The idea was to create an economic alliance that would have some pushback against what China is trying to do. And one of the very first things that the Trump administration did upon taking office was to remove the United States from the TPP. But that organization continues on. And what we basically see is that without U.S. leadership, the member states that remain are having a little more difficulty than they might have had in terms of pushing back against China. So I think that that was a problem. The other thing, of course, that we need to do is to make sure that we have appropriate trade alliances in other parts of the world as well, including Europe. And what we have seen is very difficult actually to decipher in terms of how much of the deterioration in trade for the United States has been related to trade policy versus, of course, the deterioration in the global economy writ large.
But Abby, we're at a twin deficit that's absolutely extraordinary. Stephen Roach, ex-Morgan Stanley, and of course, as you know, Abby, Dr. Roach at Yale University, now really points out this multiple deviation move in our twin deficit. Are you optimistic we can get that back to mean, or is there a new permanence here to our challenged fiscal and trade deficits?
You know, we can talk about the numbers, Tom, and I'll do that for just a moment, and to say that we have never seen numbers like this.
Yes.
When we look at the deficit, the best way to look at it is as a percentage of GDP, and it's currently running about 15%, which is simply astronomical. One of the big questions, however, is how are we using that deficit, number one, and number two, can we grow out of it? And I believe that the numbers this year, as horrifying as they are, don't really tell us as much as we need to know about the future. So, for example, if we look at the Congressional Budget Office, it looks like those deficit numbers will start moving somewhat lower. However, let's think about this. how are we using the money that we have in terms of the fiscal stimulus and so on? If we use it to grow the economy, if we use it to provide relief where relief is needed, that is absolutely essential. And so it becomes a question not just of the numbers, but what happens with them. Steve Roach, who I worked with as a child at the Federal Reserve in Washington many years ago, makes some very interesting points. And one of the things that I believe we need to talk about, again, is not just the twin deficit, but what does it mean for currency? What does it mean for the US dollar? Thus far, we are seeing that the dollar is okay, but in recent weeks and months, we see that the dollar is coming off its high levels that it achieved early in 2020. It's something that's worth watching because, as you well know, our treasury market often depends upon foreign buying. And so we'll be watching that. Yeah. The other thing to watch is foreign direct investment. That is, how much are companies directly investing in the United States? I'm not talking about portfolios, stock portfolios. I'm talking about whether foreign companies are actually investing in the United States, new factories and so on. This is not a good year to be measuring that because there's not much of that new construction going on anywhere.
But Abby, is the money going to the right places? I mean, you said it beautifully. It needs to make sure that you're addressing the concerns in the economy so that we can grow out of this debt. Where should it go to? And are the current people in charge, going to put it where it should be? So not propping up actually, I guess old energy, or not propping up companies that wouldn't survive.
Well, let's start pre-pandemic. One of our concerns had been where the money from the corporate tax cut went. We all know that with a sharp reduction in the effective tax rate of corporations, profit margins went up, cash levels went up. And in many industries, that cash was not used for growth. Instead, it was used to buy back shares, increase dividends. That's great for investors short term, but long term, what investors need are companies that are using their cash and their profits to invest in the future. And we really didn't see enough of that. And so that's one thing that we're looking at. Which industries could be helpful? We are looking, for example, at what happens in terms of where are the future growth industries. Advanced manufacturing actually did see some increases. When we talk about manufacturing, there are the differences between those things that are more commodity-like and those things that are more advanced. And the United States continues to do well in those categories. We need to focus there. We need to focus on infrastructure, and it's not just the roads and the bridges and the airports. As much as we need those, and we need to repair those, and that creates a lot of jobs, we also need to invest heavily in broadband. If we take a look at the parts of this country that are really suffering because they don't have it, it is the rural areas. And there are some urban deserts as well that don't have broadband coverage. Here in the city of New York, 97% coverage. There's some neighborhoods that don't have it. But when you go to the Midwest, you go to other parts of the country, we're looking at coverage, broadband of 60%. Those kids, those are not able to study remotely. Those businesses are afflicted, and you can't create as many new jobs there as you might like.
Abby, I want you to stay with us, and I promise you, Abby, I'm not going to ask you about individual companies, but this is a hugely important and symbolic story for global Wall Street. International business machines will do what has been demanded for years. They are basically going to split up into two companies. They are going cloud. It is all the vogue. And as Abby Joseph Cohen mentions, there is a talk of technological infrastructure is being dated, and they will split that off. This is Arvind Krishna. This is the new IBM coming in the spring of this year, creating a revolution after underperformance. 10 years trailing IBM per year, I'm going to call it 3% per year stock appreciation. The dividend trades like an electric utility in Germany, 5 or 6% with moldy single-digit dividend growth. Abby, I don't want you to talk about IBM. You'd be put in the David Kostin timeout chair, but I do want you to talk about creative destruction in technology. This is one of your wheelhouses. It is inevitable that they clear out of old technologies, isn't it? All of the companies in the greater technology area.
Well, Tom, you are making a very valuable case, and one that I think has great validity. And the good fortune in the United States is a lot of the newer technologies and the leading technology companies are based here. And one of the things we, of course, need to encourage is this sort of creative destruction, not just in technology, but in a whole host of other industries as well. And one of the things that the pandemic has done has been to push us even more dramatically in that direction. Technology writ large is doing well in the pandemic because we all need technology to get our work done, for those of us who are fortunate enough to be able to work from home. Yeah. But there are so many other industries that have been terribly afflicted by this pandemic in terms of their employment and so on. And what we are seeing is that when we are emerging, as we have begun to do, as this recession is easing up and we are seeing growth now, what we are seeing, however, is that there are some industries that are lagging behind.
Okay, but Abby, just because of time, I need to get one more question in, Abby, before we start your busy day, and that is the new regulation of Washington against Facebook, Apple, the winners as well. They're not going after international business machines, which is a failed plan. We all agree with that. You and I remember across a Bloomberg terminal when the Justice Department dumped the Microsoft case. Are you worried about the regulation of America's technologically successful companies?
I am always worried about inappropriate regulation. You know, capitalism works best with regulators who understand what the focus should be, and that is to enhance economic growth. And so what we have in that particular report is something that is an analysis. It's not necessarily a blueprint for what would happen in terms of regulatory moves. Recognize that it's not necessarily the Congress that will be making the ultimate decisions in this. What they've done, however, is raise a number of very interesting red flags, some of them more relevant than others. But this is just the beginning of the discussion. I think there's a lot more to come. The professional regulators, of course, will be much more dramatically involved than they have been to this point.
Abby, thank you so much. Generous of your time today, particularly on this breaking news. Abby Joseph Cohen with Goldman Sachs. Extraordinary headlines out of IBM. It really it speaks volumes about the religion of financial engineering, and then what we've seen as they've struggled with the cloud over the last 10 years. There's just a simple headline: taking action to simplify and optimize operating model. We're doing that at Bloomberg Surveillance. I know where they got the idea. Jason Farley, this pandemic from Johns Hopkins. We do that next. This is Bloomberg.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
when opportunity knocks at the door, don't say, blimey, I've still got my pajamas on. Say yes to stuff and it will take you interesting places.
We're clearly going through some very unusual times and, enormous difficulties getting groups of people to agree on things.
From Bloomberg's European headquarters in the City of London, join us on Leaders with Lacqua.
Good morning, everyone. Bloomberg Surveillance, Francine Lacroix and Tom Keene. We have breaking news on the restructuring of international business machines. We'll have much more for you through the morning on this really historic news. It's a really changing view for IBM. We'll do that through all of surveillance this morning. Right now in the pandemic, Jason Farley of Johns Hopkins. And what I want to do on this day, Jason, is I want to go back to first principles. Our Jennifer Jacobs reports that someone at the White House is gravely, gravely ill, the head of security for the White House, Cleve Bailey. If somebody is young and gets the virus, I guess it's not a big deal, whether in the United Kingdom, in the United States, or in India. But what is the probabilistic idea there towards older, more fragile people?
Yeah, well, good morning, Tom. When we see cases in children, they are often, and younger people, they're often the potential sources of infection in older adults. And as every decade of life increases over the age of 50, we see this exponential rise in the probability of both hospitalization, mechanical ventilation, as well as mortality. So as one ages beyond 50, particularly in the upper ages, 70s and 80s, we see a dramatic increase in the likelihood of severe illness and death.
But Jason, for the record, we've seen a number of deaths of, also healthy individuals in their 30s and 40s that were, very unlucky with the virus. So what do we know about, in certain people, it creates a perfect storm where they just can't recover from it. Why does that happen in certain individuals and not in others?
It's a great question, and we're looking at that from a variety of different immunologic perspectives, basically looking to see at various receptors on cells, what receptors might influence replication, allow the entry of the virus into lung tissue and other tissue, and ultimately lead us to greater infection. For example, we have seen the number of ACE2 receptor sites in the nose, and therefore allowing people to increase the amount of virus they're exposed to, increase with age. Now, in some younger people, their immune system may be so completely naive to this infection, meaning they've never really experienced other forms of coronavirus. They get exposed to this form of coronavirus, and there's an immunologic, loss of control, the cytokine storm. And so they respond so briskly that it overwhelms the system.
Jason, who, people in the street are mainly sometimes fed up of the extra restrictions, but who do they listen to? So a president of the United States that said, this is nothing more than the flu, people can get over it, let's get back to business. Does it change the way people behave, or do they still listen to the scientists?
Well, I think there is a dichotomy of thought now in the country that is unfortunately politically polarized. And the president does everything in his power to ensure that that remains the case. Let's be clear, we are not certain the exact clinical levels of care that the president received, but I am certain that based on the description given to us by his White House physician, they went well above and beyond what you or I would receive in a U.S. hospital. They did not follow the NIH treatment guidelines. The president did not require continuous supplemental oxygen, and therefore did not qualify for the need for the dexamethasone steroid. The president also was not severely ill, according to his physicians, and therefore may not have qualified if he were in many facilities around the country for the remdesivir. certainly, the final thing is that the patient was discharged, the president was discharged before stopping either of those drugs, and the NIH guidelines recommended that you continue those drugs for 5 days or until the time of hospital discharge and not beyond. Now, in his case, he took a hospital basically back to the White House with him so he could get back to work, which is a unique scenario. So when we think about what the president said versus what we know, we don't have all the information to conclude any facts from the president at this point.
Jason, thank you so much for the very important update. Jason Farley there of Johns Hopkins. Now let's also take a closer look at doing business post-coronavirus. The Good Business Festival has gathered top global executives to reflect on how COVID-19 has affected their world and their business. Well, Ann Cairns, MasterCard Vice Chair, is amongst those executives participating in the event and joins us now. Ann, always great to speak to you. You have a wonderful way of explaining things and also global view of how the COVID-19 will actually change your industry. I've seen a couple of reports saying that people are not spending as much on their credit card because they're worrying about their future, but use more the debit card. Have you seen any instances on things like that?
Yeah, certainly people are spending using a debit card because it's an everyday spend. They're buying groceries and so on. We also see a lot of bank-to-bank transfers happening. I think the big trend, though, Francine, is the shift to digital. You know, in a few weeks, in 10 weeks of this year, we saw a bigger shift to buying online than we'd seen in the previous 5 years. So that is a massive trend. And of course, people are also going into shops and tapping their cards or their telephones to buy goods. And that's another big shift. 8 out of 10 people in Europe are actually using that technique.
So, and do you think these are trends that will stay when we have a vaccine or when we recover from COVID-19? And what does it mean for MasterCard? Do you need, is it identity theft or hacking that you most worry about?
Well, certainly we think that the whole tapping your card or your telephone will persist, and all of our consumer studies tell us that. But another thing that we've seen, which is really interesting, is that we've seen that people are now starting to shop a lot nearer home. And so 2/3 of people in Britain are actually going out and buying goods and services and things from their local shops. And that's quite a change in trend and something that we think might shape the future of the way that cities look at, in the future, because I know in Paris and in London and other cities around the world, they're talking about the 15-minute city where everything you need is a very close proximity to where you live.
And we've certainly seen, the U.S.-China trade war take center stage, and that also applies for, Ant Financial and some of the financial, of course, fintech finances that the U.S. is trying to curb. What does that mean for MasterCard, given that you're positioned with also quite a lot of work in China?
I think that the whole idea of being a global economy is probably more important than ever at this time when people are moving to buying and selling online. And people are thinking also about their supply chains and keeping, instead of just buying just-in-time supply chains, they're building supply chains that have redundancy. So if they can't get goods from one part of the world, they'll get them from another part of the world. I think at the end of the day, we've got to recognize that we're all interconnected, and that's certainly the way that MasterCard thinks about the world.
And I know one of the things that was actually quite exciting for MasterCard was, for example, allowing MasterCard to be used in Alipay wallets. Do you need to rethink some of the strategies if the U.S. remains belligerent against China?
We will look at any partnerships that we need to, according to whatever regulations are in place. And our strategy, though, is to have a very open system and to work with as many players as we can around the world.
I know you do a lot of conferences and you do a lot of public speaking. What do people want to know from you, Anna? You've been, a leader amongst female voices, certainly in finance. Is that taking a backseat as we just try and figure out some of, the fallout of this COVID-19 and the impact on underrepresented group because they don't have access to capital?
Well, there is a big concern about whether we're taking a big step backwards, Francine. And I was at Davos earlier this year and was told by the World Economic Forum that it would take 257 years for women to have parity with men in the world's economy, which is just laughable, isn't it? That's like telling somebody in the American Civil War that it's going to be okay today. And I do think that it could go backwards now because we've seen women actually reporting that they're thinking of leaving work because they're under tremendous strain working from home and also school educating. And women's businesses, of course, don't get the access to capital that men typically get. So they are under tremendous pressure. I'm glad to see that in Britain we've got the small loan scheme and Royal Bank, NatWest Group have been reporting that their loans to women have been going up dramatically during this time. So I think we're all conscious of it and trying to make efforts around it.
And can you also update us on the Finicity acquisition? Is it on track to close at the end of the year? And how does that bring you closer to the digital economy that we were talking about?
Finicity is an important acquisition. I obviously can't talk about timelines to you. I think, we're moving into a stage of open banking around the world, and this is going to be a time when people want to connect. By the way, there are 11.5 million people today who are digitally underserved in Britain, and almost 2 million households that don't even have access to the internet. So there's a lot to do to get people financially included. And at MasterCard, we're buying companies and building the tools to make sure that we reach everyone everywhere, because you can't have the internet of everything without the inclusion of everyone.
And thank you so much. Ann Cairns there with an important interview, MasterCard Vice Chair. In the meantime, we're also looking at the markets. The markets seem to be a bit more optimistic that a stimulus deal can be negotiated in the U.S. Certainly when it comes to European stocks, they're actually rising. Now, amongst the biggest industries gating in today's trading session, I'm looking at travel companies. And then just a side note, but an important one, Regeneron, rising some 4.9% in pre-market after that endorsement from President Trump. Now, I'm looking overall at dollar weakening, which helped boost commodities, including oil and gold. Treasury yields pretty much steady. And then we also look at pound because we're looking at whether the Brexit negotiations are going the way that both parties want them to. Now, coming up next, Tom Keene, Jonathan Fair, and Lisa Abramovitz for more Bloomberg Surveillance, simulcast on radio and TV. Of course, they'll bring you the vice presidential showdown. They'll talk also about the Fed. This is Bloomberg.
Ada 3 kelompok pengungsi tersebut yang sudah berpencar arah. Kemudian kami dari Polsek Banda Sakti berkoordinasi dengan perangkat desa Kampung Jomblang melakukan upaya pengumpulan secara persuasif serta minta tolong kepada warga. Alhamdulillah warga yang terpecah semuanya berkumpul.
Welcome to That's Debatable, an interactive series on today's most pressing issues. The resolution this time, is it time to redistribute the wealth? Two perspectives.
Pointing to billionaires and saying we should take their money away is ineffective political strategy.
We have a choice in this country, either great wealth in the hands of a few or a democracy.
I'm John Donvan. Join us for That's Debatable, presented by Bloomberg and Intelligence Squared, Friday at 7 p.m.
The second half will be a lot stronger than the first half in China. We're heading to what we call the golden season of auto sales.
We are very confident, we're going to have another big growth, 2021 versus 2020.
We did not see people kind of holding back.
Chinese customers are into, right now, buying individual mobility.
We're setting ourselves up for a relapse later this year or early 2021.
I don't think the economy is going to be that strong next year, regardless of who wins the election.
We've done a good job of clawing back the vast majority of job losses right now.
The environment of high returns and low volatility of the last 10 years is really behind us.
Inflation's going to be dollar weakness, not higher yields because of the Fed.
The Fed has been flattening the curve when history says that what you want is a steeper curve.
This is Bloomberg Surveillance with Tom Keene, Jonathan Farrow, and Lisa Abramowitz.
From New York and London for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance live on Bloomberg TV and radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Farrow. With equity futures positive up 13, we advance 0.4%. Tom Keene, here's your headline. There was actually a debate overnight, a real debate.
There was no question about it, John. Really quite extraordinary to see the shift here and the change. And you really wonder, John, does it carry over to a presumed debate October 15th? The other thing I noticed, John, this morning is equities lift. John, crisis, go to cash. Do you understand we're 3% from a Dow record high?
Equity futures nicely positive once again. This rally's picked up, and this narrative, Tom, over the last week has really shifted away from the worries about a contested election, and now the conversation about the potential of a blue wave. Not our prediction, it's just the debate of the moment in financial markets, Tom.
Well, no question about it. We'd like to see more polls coming out. I'm really starving for polls, John, that recalibrate the lay of the land, particularly in the swing states. Kevin Cirilli noting that candidates really migrate to Arizona today and tomorrow to come off the messaging from Utah.
Well, Tom, have you not seen the polls from Quinnipiac? 13-point lead in Pennsylvania for Biden.
I have trouble with that.
Lead in Florida. That feels
ginormous.
Like an outlier for Biden. 5-point lead in Iowa for Biden. We can talk about the averages as well, Tom. The average right now in Real Clear Politics, 9.4 points to Biden. That's twice the lead Clinton had at this time in 2016. I feel you, Tom. I get it. Everyone else does too. They hear these polls. They're conditioned by the experience of 4 years ago. We can have the conversation with Kevin later this morning.
We will. We'll do that. But again, I look at the markets, John, and come on, John, the doom and gloom out there, the VIX, the volatility at 28-ish level on the VIX. I'm sorry, look at the equity recovery and look at corporations adjusting. John, this breaking IBM news is important.
After a big acquisition last year of Red Hat, the restructuring continues at that company. We'll touch on it a little bit later this morning. Got to start with the data. The momentum in America. Will we see it continue? The data, Lisa, about 90 minutes away.
And does the data matter, right? As you talk about the rally that's increasing, 8:30 a.m., we're going to be getting the U.S. initial jobless claims. It's getting messier, and Mike McKee has done a great job illuminating how this is increasingly being looked at as a lagging indicator rather than a leading indicator, in particular because of California miscalculating some aspects or cracking down. We'll discuss that in a little bit. 12 p.m., House Speaker Nancy Pelosi speaking on Bloomberg TV. Very interesting to see how willing she is to pass piecemeal support bills, whether it's going to be for the airline companies, whether it's going to be for standalone checks to American families, which she has rejected so far. And then 6:30 p.m., the Fed's Robert Kaplan speaking also on Bloomberg Television. John, really interesting to hear his pushback on additional rounds of quantitative easing. There seemed to be more willingness on the part of other Fed members to re-engage, to expand some of those purchases. Robert Kaplan already saying those are a pretty elevated pace. What more will more QE actually accomplish at this point, John?
Lisa, we've had so much Fed speak over the last couple of weeks. Maybe it will be refreshing to hear from Mr. Kaplan, given that he is a bit of an outlier on the FOMC right now. Price action this morning shaping up as follows. Equity futures with the lift on the week. We advanced by a little more than 2% coming into Thursday. Big rally yesterday. Equities up another 15, adding a little bit more weight to the S&P 500. Snooze on euro dollar 117.63. A move in the bond market just reversing the move higher over the last couple of days through the last week on a 10-year yield. We come down 2 basis points, 0.652%. But that's got to be the story of the week, Tom. Not just equities and a happy talk around fiscal stimulus, the move in the bond market that we started to see after it's been asleep for the last several months.
Yeah, it's outside range. I mean, you're better at the 10-year range, John, than I am. But this is important, John. Yes, yields have lifted. Yes, we've got a little bit of curve steepening. But I would suggest the 10-year real yield is pretty quiescent at a negative 0.94%. It hasn't moved all that much. So it's just a very nice lift to the mathematics and not something abrupt.
We can have that conversation right now with Sebastian Page, T. Rowe Price, head of Global Multi-Asset. Sebastian, fantastic to get you on the program. Author of a new book, Beyond Diversification. I have to say it's timely. Can we talk about diversification beyond a 10-year treasury?
Yeah, that's what asset allocators are losing sleep over these days. Are we still getting diversification from treasuries? In September, the stock market went down 9%. And the Treasuries index actually lost 15 basis points over that period. So, Jonathan, it's simple math at some point. The zero bound puts limits on potential gains from Treasuries, right? So the yield on the Barclays Treasuries index about 50 basis points, and its duration is 7 years. So suppose stocks sell off by, 20, 30%. What's your upside on the Barclays Treasuries Index? It's 7 times 50 basis points. It's 3.5%. After that, you're in trouble. Look at what we saw for German bonds during COVID. They only went up 2% in Q1. Meanwhile, the Germany stock index was down 25%. So that's what, as asset allocators, we're losing sleep over, Jonathan.
I look at where we are, Sebastian, in diversification, and it still comes back to technology weight in equities. How does T. Rowe Price suggest you manage away from the technology weighting, or do you just live with it and say it's a new era?
We like both growth, which are tech-heavy, and value stocks. There's this view that we're near tech bubble valuations in technology and growth stocks. I disagree with that view. You have to adjust for the fact that those companies with digital business models are doing very well, and they have very big and growing revenues. But nonetheless, at this point, while we like both, we're starting to lean towards value, right? It has underperformed growth by 35% year to date. So you do want to take profit in some of those large cap tech names. And let's think about the election outcome. It could favor infrastructure and massive stimulus. We see increased probability of a blue wave. You were just talking about that. And growth is more exposed to tax hikes. So overall, if we, on top of that, let's look 12 months from now, get into an environment where we're finally COVID off, you could see value do well. But we still worry about low rates and their impact on the ability of the bank sector and financials to make money. We still worry about secular problems with energy. So long story short, we like both. We're finally starting to tilt towards value, but still arguing for diversification between both.
I love COVID off. We all look forward to COVID off time, Sebastian. What does diversification mean if it doesn't mean 60-40 bonds, equities?
So what are the solutions, right? And let's go back to the Treasuries question and whether they still diversify your equity risk. First of all, we all know that there's a huge asymmetry in how diversification works. We've just seen during COVID that across risk assets, when you get a crisis, you essentially lose your diversification. And I like to look at conditional correlations. I know it's a nerdy kind of thing, and Tom will call this mathiness, but here's an example. In months during which U.S. equities are rallying, the top 5% in history, their correlation with non-U.S. equities is minus 17%. If you go to the other tail and you look at months during which U.S. equities are crashing, bottom 5% of their monthly returns, the correlation jumps to 87%. So there's this asymmetry, and you have to deal with that. And I've heard Tom mention before, right? Maybe investors are over-diversified. Diversification tends to work, but when you don't want it on the upside. So you can't use average correlations and diversify your portfolio based on averages. Solutions to the problem that treasuries have limited diversification potential in that context will include going longer duration. You still get 1.4% on the long bond index. Looking at dynamic strategies, managing your volatility directly. And ultimately, after that, if you can't diversify, really, you have 2 or 3 options. You can hedge. You can change your risk aversion and say, I'm just going to de-risk my portfolio. Or you can just accept that it's going to be a bumpy ride in markets as you invest for the long run, and that you're going to have greater exposure to loss, but that you're going to still invest in equities because you want a long-term outcome that is going to help accumulate. You want a rate of return. You don't get a rate of return on treasuries these days, especially after inflation. So those are some of the solutions investors are looking at.
Sebastian, what do you make of using the FX market to replace some of that? A lot of people looking at options around things like NOK, Kiwi, the Aussie as well, around the election. Your thoughts on using the FX market to replace what's been lost in treasuries?
It can work, and whether you use options or direct exposures, the low interest rate currencies, as you know, tend to be safe havens. So you could get exposure to the Japanese yen, for example. But typically, those are relatively small parts of investors' portfolios. And also, what's your expected return? Again, as asset allocators, we need to deal with all these trade-offs. It's not just about reducing your exposure to loss. You know, I could just put a huge position on the Japanese yen, but what's my new expected return and what are my long-term outcomes? So, Jonathan, I think, yes, currencies can be used as an instrument, but they typically have low expected returns or in a smaller part of investors' portfolios.
Sebastian, great to catch up. Really smart conversation. As always, Sebastian Page there, T. Rowe Price, head of Global Multi-Asset. Tom, it's a big conversation right now. The asymmetric risks around treasuries, they are not rallying as much as they sell off when you get a sell-off in the equity market or if you get a rally in the equity market. And my question at the moment on foreign exchange is a pretty simple one. Do you get that downside protection on something like Aussie, Kiwi, NOK against something like, say, the Japanese yen to get that little bit more protection?
It just reminds me so much of other times. And, of course, Ray Dalio has led the charge on this at Bridgewater. John, there's a cost to effecting a transaction. And anytime I hear the word option, I hear expense. And that expense takes out any potential return from the hedge. All my radar's up on this, I'll be honest.
Some of those positions were being built up over the last couple of months going into the election. I just wonder how many of those positions are in for a bit of a squeeze. Equity futures up 14. We advanced 0.4% on the S&P 500. Coming up, Sir Peter Westmacott, former UK ambassador to the United States. Looking forward to that conversation. Just maybe we might talk about the B word. Beautiful morning in New York, I swear. This is Bloomberg.
With the First Word News, I'm Rishika Gupta. It was a debate heavy on policy without all the dramatics of last week's presidential event. Vice President Mike Pence and Kamala Harris squared off last night in Salt Lake City. Not surprisingly, the first question had to do with the coronavirus.
A day ago from
Pence said President Trump has put the health of the American people first. Harris said he's forfeited by right to re-election by the way he's handled the pandemic. And President Trump called his case of coronavirus a blessing from God, and he credited Regeneron's experimental antibody treatment for his apparent recovery. The president says he plans to authorize emergency use of the treatment and provide it free to Americans. House Speaker Nancy Pelosi and Treasury Secretary Steven Mnuchin will talk again today about an airline relief bill. The two discussed the measure yesterday after President Trump pulled his negotiators from talks on a broader stimulus package. Last week, House Democrats tried to pass the extension of expiring aid for airlines, but Republicans blocked it. And And Hurricane Delta is now taking aim at Louisiana after hitting Mexico. The storm slammed into the Cancun resort area, knocking out power and triggering a dangerous storm surge. Delta has weakened to a Category 1 hurricane, but it's expected to strengthen before coming ashore in Louisiana tomorrow. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Ritika Gupta. This is Bloomberg.
Women leaders were actually better at controlling the deaths from COVID-19. Do you think out of this pandemic, we'll see more countries be willing to elect female leaders?
When we look at women leaders, we tend to project on them baggage that they shouldn't bear.
Women are given an opportunity when no one else wants to do the job.
Women had a very clear objective. They wanted to save lives.
The women leaders, if you look at their careers, have also built up a level of trust.
In fact, women have to be better at communication in order to be elected as leaders, whereas this doesn't hold true for men.
We need to get those sexist stereotypes out of our head and give women a fair run for leadership.
Trying to change the stereotypes about women is not only the business of women, but men have to be part of it.
CPG history, their experience, and really how we might be able to combine together to really create this fantastic public company. And so we kind of got into the SPAC thing a little bit before it became such a hot method of going public.
You respect the American people when you tell them the truth. You respect the American people when you have the courage to be a leader, speaking of those things that you may not want people to hear, but they need to hear so they can protect themselves.
And quite frankly, when I look at their plan that talks about advancing testing, creating new PPE, developing a vaccine, it looks a little bit like plagiarism, which is something Joe Biden knows a little bit about.
The vice presidential candidates facing off overnight. From New York and London this morning. Good morning to you all. Alongside Tom Keene and Lisa Bravitz, I'm Jonathan Ferro. Price action this Thursday morning shaping up as follows. 2 hours and about 12 minutes out from the opening bell. About an hour and 12 minutes away from the economic data in America. Claims just around the corner. Equity futures with a lift up 0.4%. Euro, a move to the downside. Euro dollar 117.54. Not much to talk about in a treasury market this morning. Greek 10-year yield. Record lows, Tom Keene. Maybe that's one to talk about a little bit later in the program.
I'm so glad you brought that up. I noticed that, John, when I began my day 3 hours before you, and it's just remarkable, John, what's happened in Greece. It's amazing how Pharaoh and I sometimes, folks, are on the same wavelength. Futures up 14 this morning. I want to take a headline from this important breakup of IBM. This is a story that's gestating right now, where they say, taking action to simplify and optimize our operating model. Let's bring that over to Kevin Cirilli in the political world in Utah, maybe on his way to Arizona or Miami, maybe back to the Beltway in Washington. Kevin, how does the Trump administration, off the debate with the vice president, how do they simplify and optimize the Trump election model?
I put that question to Rick Rennell, who is a senior advisor to the president's campaign, and he said that they're going to do it not by convincing flip districts and swing districts to go red, but by turning red districts, quote unquote, blood red. It's a turnout election, for lack of a better phrase, and it's something that is really, I think, you saw on full display yesterday, as both Senator Kamala Harris as well as Vice President Mike Pence, speaking to their respective bases, and in many ways, according to the Republicans and Democrats that I spoke with, proving why they were chosen to be on their respective tickets.
And John, sometimes I think you do better at this as the foreigner, and that you were really noticing to 2016 the turnout differentials, John.
Well, I just think that things were so tight in 2016 and the pollsters get such a bad rap looking back 4 years. Kevin, let's look at the data in front of us right now. The Quinnipiac polls out in the last 24 hours have got a ton of attention. How much attention should they get, Kevin?
Well, you know, I put this question to a Democrat source on Joe Biden's campaign, and they said that they're taking it with a grain of salt, and that there's still this anxiety, and they're having flashbacks, as you've just alluded to 2016, in which the polls were so significantly wrong. I also spoke about those Quinnipiac polls to a source on the president's re-election campaign, and they walked me through, this source did, the crosstabs as well as the sampling model. Those Quinnipiac polls, according to the Republican source, essentially suggest that the turnout level for Republicans in 2020 will not match the enthusiasm levels of 2016. They push back and say that their internal polling suggests otherwise. So it's typical spin from both sides, but you know, we'll have to wait and see until Election Day.
Kevin, did last night's vice presidential debate change anything?
You know, I think it did, in the sense that for the first time this cycle there was a substantial policy-oriented debate where voters and the world got to hear a key differences between Senator Harris and Vice President Pence. Look, there is a historic nature to Senator Harris's vice presidential nomination. She also tried to draw a sharp contrast in terms of a rhetorical approach that she argues Joe Biden would take from President Trump. Meanwhile, Vice President Pence also tried to draw a contrast to Senator Harris on issues pertaining to energy policy. He tried at one point to link her to freshman Congresswoman Alexandria Ocasio-Cortez on fracking, as well as on tax policy. And we did hear a little bit about U.S.-China trade policy.
Kevin, an important question, and this comes off our conversation yesterday with Mr. Giuliani, the former mayor of New York, and also what we saw in the first debate. Are we addicted to the zoo of it? Are we addicted, all of us across the political sphere, are we addicted to the new cacophony that Mr. Trump invented?
I want to choose my words carefully. I think maybe the bubble that we find ourselves in is addicted to it, but out here in Utah, there is a palpable frustration, as well as in Ohio, as well as in other, being on the trail and talking to voters, there's a palpable frustration about the ecosystem that we find ourselves in. And I would be hesitant to point the finger at one particular individual for that moment, based upon my experiences over the last decade in covering Washington.
Kevin, always diplomatic. We're not trying to get you in trouble. Don't worry. One thing that stood out, though, over the last couple of debates, and it's pretty clear, and I want to try and help the people outside of America that don't quite get this, Kevin. When they start talking about packing the courts, and the former Vice President Joe Biden doesn't want to talk about it, and when Senator Harris doesn't want to talk about it, can you explain to people outside of America what is going on there and why this ticket doesn't have an answer yet?
Well, I'll put it in investor speak. Look, divided government traditionally and historically has been good for the markets. Whenever there is one party in control of all three branches of government, that's when that party, especially if they have what's known as a supermajority in the Senate, is able to enact quick and fast change. And so that would include nominations, and that would include constitutional amendments. And so when you have the possibility, the very real possibility of a 6-3 conservative majority on the Supreme Court, the far left base is arguing that there should be additional justices to combat the conservative tilt of the court. Now, I do want to note, at the Bloomberg Equality Summit, the former nominee to the Democratic Party, Hillary Clinton, went so far to say that she did not support adding additional Supreme Court justices to the Supreme Court. And last night what you saw was Senator Harris walking a very tight political line in the sense that she was in part chosen for this ticket because she does have that connection to the Democratic base. And so she had to be incredibly careful, especially as she weighs, and Vice President Pence weighs, their future political ambitions in terms of taking a position. So I think what you saw last night were two very incredibly skilled politicians at many points dodging questions.
Kevin, great to catch up. Kevin Cirilli there, Bloomberg Chief Washington correspondent. It was a tremendous showing, Tom Keene, of two people's ability to listen to a question and answer a different one. But it just exposed just a couple of areas where I think if we do have a proper debate come October 15th, there'll be the areas that both candidates try and tap into.
We may have a debate October 15th, but very clearly the commission announces, we've just had this headline coming in, John. I'll quote it directly because I'm not informed on it. Second presidential debate will be remote. I would suggest, John, that's not what President Trump wanted to hear.
Well, that's the headline right now across on the Bloomberg, Tom Keene. Whether he wants to hear it or not, according to the commission, the second presidential debate will be remote. Don't want to speculate as to whether this is connected to the health of the president, Tom, or the timing of his quarantine. We'll talk about this more next up right here on Bloomberg Surveillance.
This is Bloomberg Best, your weekly review of the most important business news, analysis, and interviews from Bloomberg Television around the world.
Ken Burns, welcome to Bloomberg Big Decisions.
We have always been a mixture of things. We are always stronger for that mixture.
Growth is a way to stay competitive, delight more and more consumers.
Welcome to the Best of Bloomberg Technology. I'm Emily Chang.
They've moved the needle by acknowledging that they have to monitor the content.
What is one word of advice you'll take with you?
Learn how to listen. And that is certainly something that has served me well.
Ankiti, where do you go from here?
It's a huge market. It's a huge opportunity. I want to go 100x from here.
Our philosophy is to partner where we can and stand apart when we should.
Some things you see coming. Some things you don't. The trick is to be ready for anything. John from Infrastructure Support is working every day to keep essential market data flowing seamlessly. We keep on, so you can keep on.
From New York and London, for our audience worldwide, good morning, good morning. This is Bloomberg Surveillance Live on Bloomberg TV and Radio. Alongside Tom Keene and Lisa Abramowitz, I'm Jonathan Ferro. We have news in the past 5 minutes. There will be a debate on October 15th, but in keeping with 2020, the nature of that debate has changed. This crossing the Bloomberg, a release from the Commission overseeing the debates, the presidential debates, in order to protect the health and safety of all involved with the second presidential debate scheduled for October 15th, 2020. The Commission on Presidential Debates announced the following today. Tom Keene, the second presidential debate will take the form of a town meeting in which the candidates would participate from separate, remote locations. So that's the line that matters. The candidates will participate from separate, remote locations.
And widely anticipated, and of course the president has made very clear he wants to go forward with the actual debate. What we see from the debate, folks, is 36 undecided voters were to be on stage with Steve Scully of C-SPAN with maybe 100, 115 other guests. And the tone here from the two paragraphs, John, is simple. Steve Scully and some form of participants will be in Miami. There's no statement there of where the two candidates will be. Why don't we do this, John? Let's bring in Kevin Cirilli. I think we still got him on the wire from Salt Lake City. Kevin, this is stunning news. Is this better for Biden or is this better for Trump?
Well, it no doubt creates another spectacle as we head into next week's second presidential debate. There are 2 points that I would underscore in this 2-paragraph statement that the Commission on Presidential Debates has announced just moments ago. The first is that Steve Scully, C-SPAN Steve Scully, who is moderating the debate, will still be in Miami at the Adrian Arch Center for the Performing Arts in Miami-Dade County. Meanwhile, the town hall participants, so the individual citizens who are asking the respective candidates, are also, according to this statement, going to be inside of that venue. The only 2 people participating in this debate who will be in separate locations, and this is my second point, are President Trump and Vice President Joe Biden. And so that question is going to be remarkable to see how Joe Biden and President Trump respond to this. Now, I do want to say something that I learned last night based upon my reporting and speaking with campaign officials for the president's re-election campaign. Yes, the president is fully intending to hit the campaign trail next week as early as Monday. And there's a story out this morning on the Bloomberg terminal which says that the president could have a rally in Pennsylvania on Monday. But I also want to note that based upon my reporting, he is fully intending to go to Florida, to travel to Florida next week. This, as the president has continued to try to project that his health is on the mend ever since getting diagnosed with COVID-19.
Kevin, got to do a couple of things here. This headline crossed on a Bloomberg about 7 minutes ago, and then as you and I are having this conversation at the moment, Morgan Stanley to buy Eden Vance for about $7 billion in equity value. We'll reach out to our correspondent, Shanali Basak, in just a couple of minutes. Just to return to this topic, Kevin, if it was difficult to moderate the last debate, how hard is it going to be to moderate this debate with the two candidates somewhere else?
Well, you know, I think it raises a lot of questions in terms of how do you moderate a debate in a split screen at a time in which, you know, that during the first debate there were clearly questions about the participants speaking over one another and not sticking to the rules that both of the campaigns had agreed to. It was clearly a strategy. So no doubt this will be dissected every which way. And again, I think you could have a situation where you have one participant at a headquarters and another participant in Florida. And so I don't want to speculate, but based upon my reporting, it is being considered that these two individuals are still planning to travel. Joe Biden will be in Arizona later today with Senator Harris. And so this is both a sign of the times, but it also raises questions about whether or not there is ample time left to change the trajectory of the race. And again, I want to note, especially when you're dealing with two campaigns who feel this is a turnout election and unifying their respective bases, how will that factor into the strategy they take in a split-screen virtual debate?
Kevin Cirilli, thank you so much. Greatly, greatly appreciated this morning. The news flow this morning, folks, is stunningly varied. We have the IBM spinoff. We haven't even gotten to it yet. This is huge news. And as John Farrow just mentions, Morgan Stanley to take out the venerable Eaton Vance of Boston. We are lucky, as we had Abby Joseph Cohen on with us for the IBM news. Rob Waldner joins us now. He is Invesco Chief Fixed Income Strategist and is steeped in a legacy of asset management. Rob, I don't want to get you in trouble with your general counsel and with your senior executives at Invesco, but with respect to your decades of work, I have to ask you about what we're seeing worldwide, as we saw with your important transaction with Oppenheimer, which is the roll-up of asset management. Where is your business going to be in a decade?
Well, thank you, Tom, for not getting me in trouble. You know, I think what's pretty clear here is that the asset management business for a while has been in a period, or should have been in a period of consolidation. You know, our CEO, Marty Flanagan, has talked about that a number of times. I think he's discussed it with you, where, you know, it is pretty clear that as we move forward, you need to have scale in this business, and so that really speaks to consolidation as the regulatory structure evolves, as the market evolves. So my presumption is that's what you're seeing here.
Rob, we are at the zero bound. There's any number of ways of looking at this, the threat to money market funds, Invesco's great work with loans, et cetera. How do we do asset management forward for the Bloomberg world with fees here, but the yield here as well? I don't get that math. Help me with that.
Well, that's why you need scale, Tom, in asset management, because as I'm sure you know, asset management, you know, fees are not going up in asset management. I think particularly because what you speak to, which is the very low level of rates. And, you know, we've discussed this before, but, you know, real yields are negative. So if you buy a treasury after inflation, you get back less in 10 years than you put in. So that is forcing people to go out into more different types of asset classes, new asset classes. You know, one thing that we're quite excited about is real assets. So, you know, that's an asset class that more and more people have been looking at, and various fixed income credit assets, because there you're getting that yield. But to invest in those requires a lot more knowledge and capability and breadth of capability, and so that's where that's where an asset manager can really shine, is in those more complicated asset classes. I don't think we're going to, we're going to be managing treasury portfolios too much in the future, Tom, at least on an active basis.
Well, Rob, do investors care, though, about just how much alpha you produce, or are they just completely focused on the fee? And is it a fee-cutting game going forward? Whoever can cut them the most will get the bulk of the assets and will win this roll-up game.
Well, we feel very strongly, Lisa, that we produce alpha, and that our clients recognize that alpha. And I think every client has a different objective. So we're not saying all clients should behave the same way. Some clients are looking to reduce fees above all everything else. It seems like, at least we've had some clients like that. But we think an intelligent way to think about managing your portfolio is to pay for alpha, pay for good alpha, where you can get a diversified return that is not tied specifically to the asset class, but is diversified from that asset class. And that's what alpha is. And we can produce alpha. So, we think clients will continue to pay for alpha.
One thing that Tom Keene has talked about quite a bit is money market funds and the difficulty of running a money market fund with near zero rates. How can you charge any fees at all? Has the low rate regime effectively killed the asset management model for money markets?
Well, money market funds, have had a large inflow this year. So there's a lot of interest in money market funds. People are using them to store cash, et cetera. So that business will continue to be there. And, I think it's an important part of the capital markets. I think it's one of the reasons why we believe you're unlikely to see negative rates in the United States, is that negative rates are kind of very, very difficult for money market funds. And we have a capital markets driven capital market here where money market funds and other things like that play a large role. And so, we expect money market funds to be around for a very long time.
Rob, fantastic to catch up, sir. Sorry to keep it short. Rob Waldner there of Invesco. The headline that crosses the Bloomberg in the last 10 minutes or so. Morgan Stanley to buy Eden Vance for about $7 billion in equity value. James Gorman, one of the busier CEOs on Wall Street through 2020. E-Trade earlier in the year, February 20th, a deal at the time in stock worth about $13 billion. Joining us now, someone who follows this very closely, Sonali Basak, Bloomberg Wall Street correspondent. Sonali, it's another one for Mr. Gorman over at Morgan Stanley. Your take on the deal announced this morning?
Absolutely incredible. It was only a couple of years ago when James Gorman said he wanted to double the size of this asset manager. They kind of walked it back a little bit. They said, they didn't need to do it, but they would want to be bigger at some point. And guess what? Now you have Morgan Stanley playing in the big leagues of asset management with more than $1 trillion of assets under management. And clearly James Gorman is saying, in my last few years as CEO, I am comfortable with changing the fabric of this firm. And the person who leads the asset management business, by the way, is one of the potential successors of the business. Definitely gets his day in the sun today.
Right. Sonali, a very important question is they buy literally the history and heritage of Boston mutual fund industry. To put things in perspective, folks, Vance Sanders years ago gave Carl Yastrzemski his first job after leaving the Boston Red Sox. All that history is fine, Sonali, but what did Morgan Stanley pay here? Did they overpay to buy the heritage of the Boston mutual fund industry?
It's funny that you asked that. The shares are not reacting super positively this morning. They are down a little bit. So, and Morgan Stanley, by the way, as you're saying, mutual funds, it's an area that tends to scare people. Morgan Stanley so far has been able to punch above its weight by sticking to many private assets, more bespoke products. But remember, Morgan Stanley is also the home of Dennis Lynch. So they've been able to show that stock picking pays off. They have moved a lot of that stock picking into private markets where they have excelled pretty significantly in their investment bank. And you're right, it's a tough business, but they have made the case for public markets before, and I assure you they'll continue to do that in the coming days as they convince investors that this is worth it for them.
Sonali, Eaton Vance is well known for its credit arm, for its fixed income operation, a big presence, particularly in leveraged loans. Can we make any inference from this purchase by Morgan Stanley in terms of which asset classes Morgan Stanley sees as the most lucrative to manage going forward?
Yeah, Elisa, it's funny you mentioned that because Morgan Stanley, for a couple of years now, has made significant investments in their fixed income business. So Eaton Vance is definitely an extension of a lot of the stuff they've already done. Fixed income they like. They like private markets. We know that they like funds. They like having stock pickers. So it is definitely something that we've already known. But as we've said before, this is a huge bet, right? This is a $7 billion bet on top of the deal that they just made and just closed a little over a week ago for E-Trade. So how big does this make them now? It makes them $4.4 trillion of client assets overall in wealth and investment management. Remember, those wealth management funds, those thousands of advisors across the country will also be able to work with this platform.
Some market participants might be a little bit nervous, remembering the last deal was February 20th, just as the market top. Just throwing that out there. I'm sure some people recognize that too. Shanali, every CEO on Wall Street has a vision, an objective of what they want their bank to look like. What does James Gorman want this bank to look like? What's the ultimate goal here?
By adding to this asset management business, they have created another significant leg. We've known Morgan Stanley as a big institutional securities firm. By adding E-Trade, they've added a big brokerage, and now they have a major asset manager. They look a lot more like Goldman Sachs today than they did yesterday. And they said through E-Trade also that they would be adding a digital bank. So Morgan Stanley is sitting here punching above its weight, trying to be a much bigger bank than it was. And remember, James Gorman has almost JP Morgan-like returns in the horizon in sight. So over the next number of years, he's really betting, and we'll, hopefully we'll ask him sometime very soon whether he can hold true to those return targets while he's spending so much money.
Shanali, great to catch up. No doubt we'll touch base again a little bit later in the day. Shanali Basak there on top of this deal as it crosses the Bloomberg. Morgan Stanley stock down in the pre-market by about 1.9%, Tom.
Yeah, a little bit of a move here. I just really can't say enough about the history here involved with Morgan Stanley and Eaton Vance. John, Eaton Vance touched lightning, I'm going to say 30 years ago, when they figured out tax-managed funds. And a relatively small shop up in Boston hit a home run in products with the idea of tax-managed, particularly tax-free funds. That's some of the innovation that a very conservative shop up in Boston wrought, and of course taken out today by Morgan Stanley.
Let's get to our next guest, shall we? Sir Peter Westmacott, former UK ambassador to the United States, joining us right now on what is happening worldwide in geopolitics. So, Peter, fantastic to catch up with you, sir. Usually I try and make this program a Brexit-free zone. We can't do that today with you. Can you walk me through what on earth is going on now?
I thought you were going to ask me about the debate last night. Well, look...
We'll do that in a moment, Sir Peter.
That's all right. Good to be with you again. It's very hard to tell what's going on at the moment on Brexit, because what you're hearing here in London, which is where I'm speaking from, is that there are good prospects of a deal, which is what Boris Johnson and his team have been talking about. But you talk to people in Brussels, and although there was a little bit of a hint that maybe there was some movement on some of the issues like state aids, that still there's a big gap between where the British government is and where the rest of the European Union is. So I think if I was a betting man, I would say to you, the chances are there will be a skinny deal by the end of the year. Deadlines will be extended. We'll do the usual kind of 11th hour stuff, rather than no deal at all, because no deal at all is extremely damaging to a lot of different interests, not least the economic interest of the UK.
Sir Peter, I know you've been fishing in the North Sea, but it's not a surprise to me that on any trade transaction, it always devolves down to the ancient art of fishing. How important is this fisheries debate in getting this to a constructive outcome?
Yeah. Well, fisheries are always there. We've had cod wars. Yep. We've had squabbles with French trawlermen. We've had all sorts of stuff. It's a small part of the UK economy, but actually 80% of the fish that British trawlers catch is landed in EU ports. So there is a lot of economic interest in both directions in sorting out fish. It's iconic, it's political, it's emotional, but they say that's the last remaining item to be resolved. Actually, I doubt it. There's a whole lot of other things, including financial services and energy connectivity, and a bunch of other things which are not yet there. But yes, fish is a headline because people understand it and they would like to see that sorted out. And people are very nationalistic about fisheries rights too.
You talked about financial services, people perhaps a little bit nationalistic there as well, another sticking point. And there was a story today on the Bloomberg talking about, with the headline, London stays as a stock trading hub numbered in the Brexit debate. How close are we to London losing its preeminence in stock trading in the financial world in general, as the likes of JP Morgan, Citigroup don't wait around to find out what the final deal is and start moving staff out of the city?
Well, we've seen 7,000 or 8,000 people moving out of the financial services sector to places like Luxembourg while these negotiations have been going on. which I would say, as a Brit, is not great news. I think if there is a deal, and if there is, as a result of that, an understanding on not necessarily equivalence, but at least continued role of London as the financial services centre for Europe, I'm not sure that that hemorrhaging will continue. If there is no deal, then the atmospherics in terms of trying to sort out what will be the role of the City of London, and will other European financial services companies still want to or be able to do their innovative financial deals in London, that becomes much harder to resolve. So I think it's particularly important for financial services that some sort of a deal, even if it's a skinny deal, as I said, is sorted out. London will remain, I think, the most important, the biggest financial services centre in Europe. But no deal at all means that preeminence will, I wouldn't say be under threat, but will be weakened.
Sir Peter, I must ask you about our elections, and maybe not the minutiae of a vice presidential debate, but about the repairing or reinvigorating of the relationship across the Atlantic. We make silliness about who walks in front or behind the Queen. I understand that. Do you detect a radical shift if we have a President Biden?
I would detect a more normal relationship if we have a President Biden and a Biden administration with people around him making the system work who are, if you like, road tested from the days that they worked with Obama or indeed with President Clinton. And Vice President Biden, well known in London, knows a lot of people here. I think it would be more like a traditional relationship between allies. With President Trump, for all his emotional support for Brexit and talk of free trade agreements, which hasn't come to anything, it was volatile, it was difficult, it was unpredictable. He didn't make Theresa May's life any easier. But there's a relationship there with Boris Johnson, which is obviously nice and cozy. But his remarks about NATO, his hostility to Europe, his coziness with Putin, the unilateralism, if you like, of many of the ways in which he runs government policy, I think makes it quite complicated. So I think if you had a Biden, it would be more normal. But the one flagging that I would make is that he is an Irish American as well as British American. And he will take a very dim view of this government in the UK if we mess about with a Good Friday Agreement on Ireland as part of our Brexit negotiation.
Interesting. Tell us also about trade. We were talking with Abby Joseph Cohen of the shock of the American twin deficits, the expansion there. So much of the hope of the United Kingdom is a resurgence of trade. Can you do that given the trade flatness we see now?
Much of our really strong trade with partners like America, which is after all biggest trading partner of the United Kingdom in the world, goes on without a free trade agreement and as a result of the EU relationship with the United States. If we're out of the European Union and without a free trade agreement, which is what's going to happen, then some of that trade is going to be more difficult. There will be automatic tariffs, there will be standards, there'll be regulations, there'll be phytosanitary things which get in the way of it. So the chances of making up for the damage done by 45% of our exports, which go to the rest of the European Union now, being hit by tariffs and other obstacles once we're out of the single market, by trading relationships with our other partners, I think pretty remote. So at best, it'll be status quo, but making up the difference, I think it doesn't look very likely. That said, I think that a President Biden administration, and I know the president pretty well from my old days, will want to make that relationship work. But trade policy is done by Congress. It's not done by the White House. So it's not entirely in his hands.
Sir Peter, if I'm hearing you correctly, are you saying that there is a wave of deglobalization that a lot of people talk about that you buy into, that you think is going to continue regardless of which administration gains power?
I think there will be some deglobalization. Part of this is the result of the tensions we have with China. Part of it is a result of the real damage done to just-in-time supply chains by coronavirus and the interruption to global trading patterns caused by that. Part of it is about a little bit of economic nationalism. Can't we onshore some of those things that we have offshored and lost a lot of jobs to? So I think in many different countries, there are likely to be shorter supply chains, a little bit more economic nationalism, not so much more America First type stuff, not so much protectionism, but I think less global interdependence because people are nervous about it for the reasons I just mentioned, and also because I think there is greater distrust of China now around the world in terms of the use that it wishes to make of its growing economic strength.
So, Peter, did we get around to asking you about the debates? Because if we didn't,
really,
we should try and fit that in now. What did you think about the debates, sir?
I thought it was nice to see the debate go back to being something resembling normal conversation, because frankly, the last one was content-free and pretty offensive in many respects. It was rock bottom. This one, I mean, there was a lot of interruption, and of course, Vice President Pence had taken a leaf out of the president's book and talked through his opponent and ignored the moderator. But nevertheless, I thought they got into some content. I was a little surprised that on one or two issues, like, for example, the Supreme Court judge nomination, that Kamala Harris didn't pile in a bit more hard on the way the Trump administration has dealt with it. But equally, they both missed a few opportunities. Both didn't answer some of the questions. But it was civil, and I thought that it was an opportunity for people to get an idea of what the two different options really are in policy terms, rather than just in who throws tantrums.
This was also a civil conversation. I look forward to the next one with you, sir. Fantastic to catch up. Sir Peter Westmacott, it's been too long. The former UK ambassador to the United States. Thank you very much, sir. Some headlines crossing the Bloomberg in the last 45 minutes. These are the two main ones. One from Morgan Stanley to buy Eden Vance for about $7 billion in equity value. That came shortly after we got the headline from the Debate Commission overseeing the presidential debates. The second US presidential debate will be remote. October 15th, Miami, Florida. We understand, Tom Keene, that the moderator and perhaps some participants who will be asking questions might be in Miami, Florida.
Yeah.
The presidential candidates will not be.
It'll be interesting to see the reaction, John. I really have no idea, no speculation here on what we'll hear from Team Biden and Team Trump as well. Many people predicted this, but I'll be honest, John, a lot of people thought somehow we'd get it done under a more traditional guise. I mean, we had the plexiglass last night in Utah, just as one example of that. But, you know, John, to be honest here, and frankly, it's a lot like IBM, and maybe it's a lot like the asset management business with Eaton Vance's takeout. You know what, John? We're making it up as we go.
Can you mute, please? Do you think that's what's going to come up again and again and again? For anyone that's done a Zoom call in the last 8-9 months, can you imagine trying to moderate a debate?
Well, they'll probably mute the president